Good morning, YouTube. How are you guys doing? I hope everybody's having a fantastic morning. Futures are pushing a little bit lower after yesterday's recovery. We're currently trading about 27.75 in the futures market. We've got, 40 minutes to the cash session open. Our fearless founder, Mr. Todd Gordon, will be a few minutes late. Had some troubles at home, so we do apologize for that. Good morning, Alex. Good morning, Terry. How are you guys doing today?
Hey, Bennett.
What's happening?
Good morning, guys.
Good morning. Good morning, YouTube.
Apparently there was an earthquake in New York, upstate New York, somewhere near Montreal, I think. Huh?
Yeah, apparently they had like a 3.1 magnitude earthquake, and I grew up in California, so it's like a 3.1. Did as you mentioned earlier, did the dishes rattle a little bit? But I guess if you're not used to earthquakes, yeah, I agree. It might be a little bit different.
When the bed's shaking and you're not in it, that's the problem.
Oh, Terry, I love it. So anyways, guys, we're just watching futures here. We continue to see. Let me go ahead and bring over my Thinkorswim window. Just take a look at what we're seeing here. So we have dollar yen pushing a little bit lower. Gold's trying to push up. Crude oil continues to move lower as well. This is kind of a move that we were watching as a possibility from a technical perspective, and it's kind of interesting. It's kind of like an instance of what comes first, the chicken or the egg. In this case, is what comes first, the technical setup or the catalyst that eventually leads crude in that direction. You can see Dow Jones, NASDAQ, and S&P futures also pushing lower. Gosh, we were trading 28.82 into the close yesterday. As soon as futures opened up, we've continued to push lower. We could absolutely still hold these levels and continue to retrace higher from here. We do see technically oversold conditions from a kind of a traditional technical analysis standpoint. We do see 30, 10, and 2-year bond futures pushing higher. So certainly looking forward to seeing how things open up here. Let's take a look at the internals really quick. Yesterday, you can see TRIN. We had that initial push lower. We kind of retested what was the futures session low. Out of the open, we had TRIN pushing to around 1.4 and then proceeded to fall under that kind of line in the sand of 1.0. We did see a little bit of an institutional sell program going off during that sell-off. We had a neg 1481 on the tick. But overall, vol spread was relatively positive. Advanced decline started out with a nice gap up. We pushed into negative territory, but ultimately closed up 1536 there on the advanced decline. Put call ratio does continue to push higher, and as you can see, the average volume just continues to trend ever so slightly to the upside. So let's go ahead and jump into it really quick. We'll take a peek at what we're seeing here in the S&P, and then we'll take a look at a sector analysis perspective, and then we'll take a look at Forex and crypto as well. So let's go ahead and bring over the Motivwave window, the favorite platform for utilizing the Elliottwave theory and counting our waves. So we are currently tracking two possible interpretations. Both of them have very similar outcomes. Possibility number one is the ongoing fourth wave triangle, which we've been proposing essentially since back in November of 2018, just simply considering time elapsed in wave two of the same degree. Alternatively, account that Alex has proposed that is very much so valid and actually kind of fits the magnitude of the decline that we're seeing thus far is that of perhaps a flat in this wave 4 position. So as opposed to 3 off the September 2018 high being an A wave of an overall wave 4 triangle, this would simply be A of a wave 4 flat. We have a 3-wave rally back into a 1618 of A. And now we're working this 5-wave decline. Essentially, we are looking for an initial target, downside target of around 2634. If we do continue to see this decline push towards the December 2018 lows, and if we break through the December 2018 lows, that's when we're going to be kind of switching to the flat possibility. Do I think this is the start of an all-out bear market? Not yet. Certainly don't see that in the cards. I think if that were the case, this would be a very, very short cycle degree 5th wave, not meeting any of traditional fib levels.
And one of the things I wanted to hit you up here, Bennett, on this was where you anchor your A wave, and then from where that A wave is anchored, the blue A.
Oh, yep.
Then your C versus A projection of 100% is a typical target, not but the alternate possibility is the 1618. So yeah, that's what I'm talking about. That C versus A right there. So that kind of we kind of need to drill in and identify that we've got 5 waves down in A. And then that A wave is anchored, and we indeed are in that up wave. And so here's where we have the 5 waves down and the 3 waves up, and now we've got A, B, C. And so now we're looking at 5 waves down in C that should be equivalent in distance to the down thrust in A, and that would put us at a target of 2634.89, right about there. But then the problem you have with that is decomposing the 5 waves inside of that match up with that distance. And it could be that we already, instead of what you've got decomposed as a very large green 1, 2, 3, 4, that indeed we've already moved down a bit, and we're already in the 5th wave of this move down in blue parentheses C.
You're talking something along the lines of this
that possibility. Now, I'm a bit of an optimist, but we can paint the more pessimistic picture that we have another bottom to fall out of the market, or we can take a look at what we take this thing one step at a time and make conservative judgments.
Yeah, I completely agree. In fact, this was something we were discussing with Alex before we got started here, in that possibly our blue B wave here was anchored March 3rd, and this is an initial leading diagonal in 1 back into, we came close to invalidation, but we didn't invalidate, so still technically valid within the wave principle rule set. We have a 3rd wave, which was pretty much spot on, a 2618, which is very appropriate. Perhaps yesterday's high was all of 4. That rallied right into a 38.2% retracement, so that makes complete sense. If we bring in a 618 of waves 1 and 3, that takes us right into equality of this A wave decline. And also notice it takes us into equality of C of the triangle. So let's back out and show this on a kind of like a daily chart. Oops, and we need to bring that in here. Red count number 2. So essentially, guys, what he's proposing here is, if in fact we do see this little 5-wave structure resolve into support around 2640, that would essentially be right into this overall higher degree Elliott trend channel, and could very well set us up for this D-wave rally. So as he mentioned, just kind of taking it one step at a time. And I think regardless of if we are in, let's bring this back here. Even if this is 1, 2 of C, or if this is 3 and 4 of C, we should still see that move down to 2640 area support. So curious to see how the market opens today, and we can kind of take it from there. We're also seeing some, let's take a look here. I wanted to bring over the oil chart just briefly.
Our fearless leader has joined us. Welcome, Todd.
Hey guys, excuse me. Good morning. I'm just here listening and getting caught up. Sorry for being late. I have a note.
No worries. Good morning,
Todd.
Todd.
Shaken out of bed by an earthquake this morning, did you?
Yeah. It's been busy here in upstate New York. We had an earthquake. My wife's got the flu. One kid's home sick. She doesn't have. I hope she doesn't have coronavirus. Obviously, it's been busy around here. I was in the city for CNBC yesterday. Was very, very quiet in Times Square. It was eerie how quiet it was. Made me realize, what the hell am I doing down there?
I can imagine.
But yeah, so it's been crazy. But I'm just listening, guys. I don't want to interrupt, and everything you're saying, guys. I fully agree with, and just trying to figure out, what kind of corrective structure we're in. I was just looking at the rut as you guys were going through, and much more weakness, more pronounced either in this flat or this triangle correction. But no evidence of 5 waves down on this daily or weekly rut to indicate that this is a significant top. It's just riddled with 3-wave corrections throughout, and that's the kind of theme that we're in. So I'm just listening right now, guys. If you need any help, let me know. I'm here.
Very good. I appreciate it. No, you bring up an excellent point there with the Russell 2000. That was something we were looking at with our members in our nightly strategy video update. One thing I wanted to point out really quick, let me go ahead and bring over the crude chart, then we'll transition into some sector analysis. We've been tracking, if you guys follow my public blogs, once to twice a week, I'll put out anywhere from 10 to 20 minute market video update. And this is something we've been watching since around 65. We counted an initial 5-wave motive impulsive decline. We have beautiful equality of waves 4 and 2. And then we entered this 3-wave retracement where we have this extended B wave. So you can see a nice clear discernible 3-wave subdivision within B. We have equality of C and A, and we also ran into resistance right at the area of the previous 4th, which is very common. From there, we started this initial 1-2 prior to the Russia, Saudi Arabia, OPEC situation. And this is where we have this beautiful extended acceleration gap here in this wave 3. I see this as a corrective move back in a 4th wave structure. If I take you down to a smaller time frame, you can kind of see a series of 3 waves there. But getting you back to the 195, we've got resistance between 34 and 36. Crude is currently moving lower in the futures market. We had a push to over the 36 handle. We're now back under 33. So actually, this is kind of in line, Terry, with what you and Alex were proposing, in that it's kind of a 3-4 situation in the indexes. Because essentially, if this count is accurate, we should see a final 5 of 3 move, some sort of a 4th wave consolidation to square up to this. And we have a pretty significant zone of fib support offered from multiple degrees of trend. We have anywhere from 26 to 28 is kind of our main fib support zone. If that breaks, you've got the 786 down at 18. 20 such a psychological level that I think we'll certainly try to defend this fib zone. But this would kind of signal that we do have additional downside to go left in the indexes before we see that kind of C wave completion of be it the triangle or the flat possibility that we've been looking at. So curious to see where everything unfolds. Excited to be seeing this market kind of finally correct after a little bit of an extended run there. Let's see, guys. Terry, are you set up on GoToMeeting and get us up to speed with some sector analysis? I'm curious to see how REITs, utilities, and staples are doing in light of the breakdown in yields.
Yeah, I'm very interested to see how sector rotation is playing out here.
All right. Got that?
Yep, screen's coming your way, sir. It's all yours.
Okay, folks, this is the weekly sector rotation. Hope you members are getting to enjoy the videos I publish every Monday, which talk about prior week's market action and get you set up and poised so that you know what direction these sectors are trending in. Today, we are seeing the continued increase here in the defensive sectors and utilities and real estate. They've been pushing higher for several weeks now in this rotation. And now, as we move into this week, we see utilities has now moved into our leading quadrant, but it's joining communications and technology. The interesting thing to note is healthcare, which had been declining rapidly in recent weeks, made a sharp reversal, and is now actually coming back out of this weakening quadrant, pushing back up into our leading quadrant. Technology still remains very strong out here. So yes, the market is volatile, the market is dropping, and technology stocks are dropping too. But at the moment, all of the technology stocks seem poised to be able to withstand this correction, and I believe many of the tech sector stocks will still be the leaders as we come out of this correction. Financials, heading dangerously south into this lagging quadrant. Obviously, I think due to the yields dropping, which is going to put pressure on bank earnings. Energy just diving completely deeper until we get some kind of relief here in oil prices. You're going to see energy stay down here. What we want to look for, though, is we're going to look for something similar that's happening here with XLV and or the materials sector. You want to see when that turn up happens. When that turn starts to happen, you're going to then start to see probably some bargain buying in the energy sector, maybe some more mergers and acquisitions, who knows. But for now, relative strength is extremely low here in the energy sector. I'm personally not doing any bottom fishing in the energy sector right now.
Terry, isn't it amazing how many? Sorry to interrupt. Before crude just got cut by 20-30%. I had several conversations on CNBC with the more fundamentally equipped analysts who would say that energy stocks were a compelling valuation, and that was before they just got cut by 20-30%. It just goes to show that I understand securities can be cheap for fundamental reasons, but they're also cheap for a reason. That's why your technicals really need to line up with your fundamentals. And it was clearly there. Energy had been lagging solidly in that bottom lagging quadrant for as long as you've been using this tool. I mean, correct on the monthly and weekly chart?
It's been certainly been to the left. As we go back in time, energy's been. It hasn't. I haven't seen it. This is going all the way back to April last year. And you can see where the energy in red there, it's just been wandering around in the lagging quadrant. Tried to push up into the improving quadrant for a while here.
Yeah.
Around November.
November, okay.
Yeah, that's in early November when the defensive sectors finally shot south. We regained momentum back in the overall market. Right. Energy kind of pulled up with it. It kind of pulled up with the rest of the sectors. But it didn't stay long, and it rapidly rotated back down. So just a few weeks in the improving limelight, and then wallowing around, and then pushing back down, heavily, starting around the first of the year, as the defensive sectors again starting to pushing themselves out of the lagging quadrant. And then there we go. So there's that divergence, right? So polar opposites. Polar opposite. You could play a pair trade, I think, in utilities and energy right now would be a good deal. So,
yep, got it.
Let's jump into, because I do talk about in technology, and I want to show you this rotation. Now, this rotation is comparing the top 20 stocks in the tech sector with the XLK index itself. Okay, so we said the XLK ETF is up here in the leading quadrant with respect to the SPX. Who are the stocks in the XLK that are actually leading in the XLK, right? So here you can see there's very few that are leading, but you've got a nice little group over here, Intuit, PayPal, IBM. They're in this improving quadrant, and they are pretty far out from this 2 standard deviation filter. So they've got some possibilities here that these are going to be some future leaders. Of course, Adobe, Salesforce, Microsoft, and NVIDIA are currently in our leading quadrant, and these are your current leaders. Apple's wandering around down here in the lagging, in the weakening quadrant. And we all know about that, with the manufacturing and the issues in China, the coronavirus putting pressure here, amongst other things. But not all of the stocks in the tech sector are in good shape. There's a handful down here that are in the lagging quadrant. The only positive sign I see is that their momentum drop is starting to fall off here on Qualcomm and Broadcom, and actually you kind of see an improvement here in Fiserv. So it's good to take a look not only at the stocks that are comparing themselves to the S&P, and this would be this rotation, right? But also you want to dig inside of the sector and say who are the market leaders, right? So we just look at this one, Nvidia leading, way out here, started weakening against the S&P, but Nvidia itself is one of the leaders when we compare to the overall index itself. Same thing kind of goes with semiconductors. If we take a look at semiconductors, and we do the same, we look at compare the stocks in the SMH, which is a subgroup of XLK. We compare that to the SMH itself. Who are the leaders there? Again, Nvidia, AMD, Micron, Intel, but I can see the volatility. This is still a weekly chart, but the market volatility has been going on for a couple of weeks, and we're seeing some shaky moves here, and a lot of this stuff inside here just means that it's trading exactly as the SMH would trade. So, but yeah, I still firmly believe in that. I'm going to jump over here to
so Skyworks was actually in the leading
layout here, and I want to look at inside the tech group a little bit more detail.
Before you go on, I'm just looking at the NVIDIA. Actually, we talked about NVIDIA on CNBC yesterday. Couple levels that come to mind, if this is correct. I think on the weekly chart, there's support around 215. We're trading 261 in NVIDIA. I think the 50-week moving average is 214, and then the 200-day moving average is at 200. Plus, it looks like there's C of 4 support, fib support around that 210 to 220. So any weakness between 215 and 200, I think that's support there.
This is the
support
week.
there.
These will be the 20-week moving average, the 50-week moving average, and the 200-week.
Yeah.
But if I drop down to the daily, I get what you're talking about here. Let me pull that daily chart in. Right. So now this is a 20-day moving average, a 50-day moving average, and a 200. And certainly, like I said, when the S&P penetrated through this 200-day moving average, and most of the other stocks are down here in this area, and look for NVIDIA bounced off the 50-day and is still finding support here, exactly as you said, Todd.
Yep.
So this is what makes a leader. This is what leaders in the current corrective market look like. Is they're just continuing to hold their own performance. So I would look for more outstanding.
And then, as I was doing the research on NVIDIA yesterday for the segment, I was just reading how much market share AMD is capturing from AMD in the GPU, and this. You and Bennett know this better than I do, but GPUs and all the future technologies they're working on. But from a price point of view, AMD has started to lose ground and not being reported yet. Relative to NVIDIA. NVIDIA is showing better relative strength. Do we have any news attached to that within this recent, in this volatility, NVIDIA is holding up better? Do we know why, or are we going to figure out after the news is reported?
I haven't done any research on that, Todd, but you can see, just taking a look here, you can see AMD is still very strong in terms of relative strength, actually stronger in this group here in this time frame than NVIDIA. Okay, so we are compared to the SPX again. So
if there's any tech followers in the YouTube room, guys, just let me know here. Let me just pull this up. I'd be curious to know if there's any technology that NVIDIA is looking at that would justify this outperformance. So, but anyways,
the other subgroup. Yeah, the other subgroup in technology is the software group, and here's where Salesforce, Microsoft, Adobe, Autodesk, even Fortinet. Fortinet still is moving a little bit weakening here, but still huge relative strength ratios. So these guys. So I was noticing the other day when we had I guess was it yesterday? These days are all rolling together. That when tech stocks were up, semis were not up as much as the tech stock. And I had been telling you over weeks that the semiconductor has been carrying everything.
Yep.
I was usually seeing the semiconductor the semiconductor subgroup higher than the XLK. Then when I saw it slightly lower than that, I knew that other subgroups in the tech sector had to be starting to gain some strength. And so I'm seeing it here in the software group. We're also seeing it here in the IT services. So, you know, take a look here at, I got too many tails here. Let's pull those tails back. But these other stocks, such as VeriSign, PayPal, Akamai, Jack Henry, I don't know some of these guys. And here's Leidos, right? GPN. There's a huge group up here that's already in the leading quadrant, again, compared to the S&P index itself. So, yeah, I still think technology, broad-based. There are some laggards in technology group, and that's coming out of the electronic equipment, instrument components. You can see everybody here is down in the lagging quadrant. So this subgroup here, Corning Glassware, FLIR Technologies, I guess these are related to the defense industries, right? CDW, Amphenol. I don't know all of these names here, but they're you know, in overall, XLK is strong, but there are certain subgroups that are even stronger. So when you're looking for building your watch list to come out of this correction, take a look at this kind of stuff. So
Very good.
You know, and
anything,
if you have,
any requests?
well, I was just listening to, you know, your point on technology continuing to be relatively strong. Just looking at Microsoft, Bennett, do you have sort of an outlook on Microsoft? Because I feel like we'll know sooner rather than later on Microsoft if this is a completed three-wave move down from 190. You know, we've got a pretty strong move back here in Microsoft, and if it gets much further above 170, it sort of invalidates that this would be wave 2 of a 3 or C down. So it'd start to indicate you might actually see, you know, if that is a completed three-wave move, you could go all the way back to 170, 180 in Microsoft. I just want to put that out there for your consideration.
Yeah, absolutely. I'm kind of looking at the same thing. I think the Microsoft chart does hint at a possible move back towards 170, which would support that continuation in the indexes. We were kind of talking this morning before you arrived about the fact that futures are down so significantly overnight. And it's like, well, it's just kind of a reversion to the mean. I mean, the volatility that we have right now, it's not surprising to see, you know, the futures market kind of correct back to support levels from yesterday. So I don't think just because of this futures decline this morning that we could, you know, say we're going to break down right out of the open. So
one of the interesting things I'll note is that when we had the you know, the last corrective move back here in December 2018, right? And we bottomed here. We actually saw Microsoft dip below the 200-day moving average, and then it set that low in. And this time with our correction, Microsoft is holding well above this 200-day moving average, and is indeed, you know, challenging, you know, playing around with this 50. Apologies, I think my data here on this chart is not updated for some strange reason, but it's missing a few bars here on the daily.
We're over the weekly 50 as well.
If I can get that to reset. Yeah, it looks like I got March 6th data, so I don't have the most current. So I'll let you pull the chart up if you want to take screen back, Bennett. We can let you
certainly
take a look at some of this stuff.
So let's take a quick peek at what we're seeing here in Microsoft, and then we'll bring Alex in and get you guys up to speed on Forex and crypto. All right, guys. So let's just take a step back and let's look at the weekly chart really quick and just kind of gain some context as to what this correction might be. So going back to 2012, we count an initial primary degree wave 1. Which was then met with a three-wave correction here in 2, another 1-2. Here's this wave 3 that took us just shy of a 2-6-1-8. We have this little bit of a shallow fourth wave from a third wave retracement standpoint, yet it demonstrated equality to wave 2 of the same degree, which is very common. From the December 2018 lows. We can count a completed 5-wave move with a little bit of an extended fourth here. We have a couple of trend channels that we broke above. So we have the Elliott trend channel offered from this minor degree, and then the intermediate degree here. So you can see kind of broke through those levels. We're pulling back, but if I get you off the weekly, I'm going to take you all the way down to a 1-hour chart.
Before you get off that, Bennett, before you get off that, I mean, would you agree? Just go back to that weekly for me.
Sure.
It's probably one of the simplest and cleanest charts out there.
It really is.
I really don't think, right? There's not much room for interpretation there.
Yeah, it's a pretty straightforward wave count.
I think Microsoft is showing its significance in this market, much like Apple did on the initial break over in 2019 when Apple was kind of leading the market higher. I'm wondering if Microsoft is starting to sort of rotate into tech's leadership, which, I mean, obviously being, such a large component of technology, it's sort of an obvious statement, but, that shows wave 4 consolidation for at least as long as that orange circle 2 took, which looks like to be at least a year.
Yep.
So that 100% is what, November of 2020? Okay, so 1618 is 2021. So that takes us into the election.
That's essentially what we're looking at with the fourth wave triangle in the indexes.
Right, right.
But
what's different? But what's different in Microsoft is if it's the indexes, we're in C of a triangle. But okay, but I guess this could be a shorter triangle. So we're in C of the triangle in the indexes. That still takes us out to next year. But this would just be A of a potential triangle in Microsoft, right?
Yep, I agree. But to your point, I think it's very much so valid that this could be kind of hinting at some support in the market that perhaps others aren't seeing. From the highs, this 5-wave structure did give us the kind of typical B-wave retracement. In fact, this could be 1, 2, 3, and 4 of C, like we were talking about in the indexes, and this ends up being A of some sort of a wave 4 correction.
Right. And that's my point. Like, it's got to turn over soon for that to be wave 4 of C.
Yep, I agree completely. So,
and if not, if you start breaking higher, I mean, you got to secure, some kind of 3-wave move off of the top. And then, as we were saying earlier, then you're going to go up and tack that wave 4 high up around 174.
Yeah, so I think 152 to 170 area. We'll see how Microsoft responds with the indexes here. We're pushing back up in the futures market, so we've got about 8 minutes to the open.
Yeah, that's key, guys. We got to watch. I think Microsoft is telling us it wants to offer some leadership.
Very good.
And that's a good idea.
Go ahead.
Karen says, please show Apple. I think that's a natural, next step after this discussion. Where is Apple right now?
Yeah, so I'm tracking a couple of possibilities on Apple. Apple is a little bit more concerning, I have to say.
Yep.
For a couple of reasons. So let's start out with our full count here. So going all the way back to 97, beautiful 1-2, smaller degree 1-2, smaller degree 1-2. We're looking at this as a 5-wave move of orange 3, possibly. Notice if we were to take the completion of 2 and 4, project that parallel trend line over 3, that's right where that 5th wave came to completion. Alternatively, this could be, given time elapsed in this wave 2 of the same degree, this could very well be some sort of 4th wave flat like Alex was proposing in the S&P, which would take us significantly lower. But if you just go all the way down to a smaller time frame here, so far we've kind of seen a similar story as to Microsoft. 5 off the highs, little 3-wave move back. This looks like, at least on the 2-hour, this looks like a 3-wave move to me.
Oh, interesting.
This could be 1, 2, 3, 4 truncated 5th of A, 3 waves down of B. We rally up in C, and then move lower with the indexes. But until we really break through 250, Apple's a little bit tricky. And also, notice the completion of this move here. That's really difficult to call this a wave 5 ending contracting variety diagonal. It's possible, but it's really kind of ugly, which also opens up some other possibilities. So it's a little bit interesting here as to how you would count this. Because if I just kind of hide all of the waves and take you back to, a daily chart. But to me, it kind of looks like a three-wave move back. So Apple's a little tricky.
Apple's certainly, and I think, Karen, thanks for bringing that up, and it's just a natural progression in the discussion. I think the point stands that we've got to take our cues from Microsoft, and because the wave technical position of Apple is so unclear, it's not offering leadership right now. Maybe it will exert itself in terms of potential downside. It could offer leadership on the downside, but not on the upside. So we need to watch Microsoft.
Yep, I completely agree. All right, guys, we've got a few minutes left here. I want to bring Alex in. I want to see get a little bit of update on dollar yen and yield. So come in your direction, sir. The screen is yours. You have the floor.
Can't hear you.
You muted
Can't
yourself.
hear Alex.
Can you hear me now?
We got you.
Oh, Hey, Alex.
Good morning, Mr. Todd.
You've been busy, man. How are you?
I'm right on the spot as always.
What do you mean? What do you mean you're on the spot? We put you on the spot, or you're on point this morning, which means your A game is here and you're ready to attack?
No, I'm on spot and on point for some months, so I'm enjoying the developments.
Absolutely.
Just teasing you a bit. Okay.
Alex is
guys.
always on point.
Yeah. So this is dollar index. Okay. So this is dollar index, and I think we have just started a relatively big move down in dollar. So this was a five-way move lower, ABC up, and I'm looking to buy euros. As you can see on this chart on 4 hour, we have a 5 waves move lower. I expect an ABC pullback to this 200 moving average resistance, and I'm gonna sell dollars on every possible currencies against the dollar because Fed will move lower. That's the first thing. We have a Fed tool here which is pricing now 25 to 50 basis cut on 18th of March. Okay. So we are coming close to a zero bound, which will actually provoke a very big rebalancing of the currencies in the world. And I expect a big move from dollar in the next weeks on the downside. Okay, at least for an ABC. Yeah.
Do you think this is the volatility expansion that we've been waiting for? FX is, I think, in the euro is the lowest realized volatility in 4 decades. Like, is this the volatility mean reversion we're expecting?
Yeah, I think so. Yeah.
Okay.
I think so. We've
been saying this for years because Alex and I first met when I was on the FX side of the business during the credit crisis when the yen carry unwind was happening, and when FX starts getting inside of the macro intermarket flow, when FX starts moving, I think everything really moves. So if this volatility carries over and continues in the FX market, it will keep markets very volatile in trading on a macro perspective. So you guys know, listeners of this show, we've been saying that for at least a year. And if it's starting to happen, like, that's really meaningful. So sorry, Alex, continue.
Yeah, actually, not to brag too much on ourselves. We have been spot on many things. Especially
you've been calling this, Alex. You need to take a victory lap. I've been more bullish, and I was wrong, and you were looking at the signs from FX market that risk aversion is here, and you've been right.
Yeah, I'm not more looking in that perspective of right or wrong. I'm just glad that we as a team have a balancing view, more in that respect. I really don't want to overlap a victory lap. I'm just glad that I'm part of the team, which also encompass the view, which was generally also right. So from my perspective, I look on that way.
You're so humble. Sounds like you're running for office. You were spotted. Well done.
Okay, so yeah, I'm not running for office, but I mean, I think that's a view of a kind of you don't you know what one of my friends says, when you think that the victory is in, you then put the helmet on. So this is still not over. So
Isn't that the truth?
okay.
That's the truth. You're
So
right.
we're gonna get a victory lap when we're gonna see a dollar yen here. Okay. So this is the longer term chart of dollar yen, and we have been calling this possible triangle finishing and the move down to this, let's say, 92 to 90 levels. And I'm going to show you a smaller time frame. So this is the large perspective. If you look the bunds, we have been also spot on the bunds. We are moving down in a final third wave, and we're going to correct in a fourth one. So also the bunds, price of the bunds are going higher, and yields are moving lower in Europe. And also 10-year yields, I have transformed this wave count just before we had a huge move down. And I said on our members webinar, and I think on this webinar, that I think this is a wave 3 down, judging by its character. And you can see now that we are possibly in a 1-2, down in 3, some correction in a wave 4, and move down in a wave 5. So yield cycle, it's going to finish a move down very soon, which is going to correspond with the stock's lows, because the yields up and stocks up, if you look, the correlation charts are pretty good together on the upside. So I think this low in yields, it's going to be low in stocks, but I don't think this is still finished yet. Okay. So let me show you some charts. Euro dollar actually exploded higher from our 108 level. We have been calling this for almost 2 years, year and a half. So low was at 107.80, and I'm looking to go and buy euros after the ECB on this pullback down. So clear 5 waves up. I'm expect a pullback in a wave 2 or B, and I want to be long euro dollar soon on a move up. So on euro dollar, this can be an ABC, but I expect a 1, 2, 3, 4, 5 to even 129 level. So you know me that I'm conservative, but I'm exploring a very reasonably 129 or 130 levels, which will be a very huge move in FX by the 5 waves up from here in euro dollar. Short term, I'm looking this correction to finish. I'm looking to buy it here and then to see a prolonged move on the upside. As regards of dollar yen, I'm afraid, and I'm kind of leaning that we might gonna have a flat in S&P. This is not very well understatement, because if we are in this structure, and this is either an end of B or this is the end of B, this is a wave 1, and we still have a lot of subdivision to the downside to reach our 86.90 levels here in dollar yen. Okay, so be careful if we go below 2,650. So this move down, if I'm correct on this dollar yen chart, it's either going to be sell dollars all around, or going to be a move down in flat in S&P, in clear 5 waves with the dollar yen. So just be aware that potentially, if you see this, we might see a 1, 2, down in 3, 4, and 5 in dollar yen. So what I'm looking here, I'm looking to trade this pullback. There is clearly 5 waves down, A, B, C, and then we are going to go further lower. Okay. What else I can show you? I'm still not prepared to buy the Aussie because the Mr. Copper didn't reach my levels. So I'm going to still wait a little bit on a move lower in copper before I decide to buy Aussie on a possible move down, on a possible move up. So as regards of cryptos, I must say that we also have been quite right on a current correction. Many of the pundits and of the market was bullish on this 10,000, and I said many times that the previous X or B wave is going to hold resistance, and we did. And now we have an ABC for WX A, up in B, and down in C. And I'm going to look to buy the pullback very cautiously, because you can count this also in a 5-wave move lower, which you can see here. So I'm going to be very cautious with cryptos, because we might be in a triangle on a daily level as well as as is S&P, because the S&P and Bitcoin are quite correlated. So be aware that we might also do a 4,000, 5,000 levels, and then start to go up in D and E, and then we move down when the election finish, as well as the triangle in the S&P. So be aware of this chart if we don't hold these 7,100 levels and we start to go on the upside. Okay.
That's really good information there, Alex. I mean,
Yeah.
I think it's pretty clear at this point with the volatility that Bitcoin is not acting as a safe haven, and in fact, it's better correlated with risk on and risk off in the equities. I think that's clear.
Exactly. It's very clear now. So we're gonna be tracking on that way. So this triangle also depicts a possibility that we're gonna stay in consolidation much more longer. That people are actually trying to bet on a possible halving, which will come very soon. So I'm aware of both of these options. Mid-May, yeah. I'm aware of both of these options. I need to buy it here, though, at 7,000 with a small position with our members to test the water in a case that this was a wave to finish and we go up on some event. So we cannot actually. So this is the bullish wave count. Okay, so we're gonna test this trend line. And guys, you need to be long here. In any case, even if you are wrong, you need to be long here, because technically this is a great levels. Okay, so I'm gonna test the water with a small position. If we break down, I'm gonna switch to a pretty bearish wave count, which will take us down to 5,000. Okay, because if you look this on a smaller time frame from the Elliottwave perspective, you can also count this as a 5-wave move lower. So I'm going to show you that. And this is worrisome. Okay, so look at this. If you take our Elliottwave tool, okay, so this is a wave 1, okay, up in 2, 5 waves down in 3. We are in some type of a consolidation. There is no overlap between these waves, okay? There is no overlap anywhere. So be also aware that this can be counted as a 1, 2, 1, 2, 3, 4, 5. We have some type of a small consolidation in wave 4, and we track actually a full impulsive wave to the downside. Then a pullback actually will be shortable to 4,000 levels, okay? So what is not actually very clear, because you can count this in both ways, but if I pair that up with the S&P, I'm going to be brave and even say now, which is not mine characteristics, that possibly we might be in a big triangle back to 4,000 levels in the next year, 2020, together with the S&P. And if we do this, the S&P will actually be potentially in a flat. So be careful, guys. All of this is also dollar, yen, Bitcoin, S&P. I would like we hold 2,650 level, but on many charts, I see a potentiality that we might be in a flat down to 2,100, 300 levels. So be aware of that, please.
Very good, much appreciated. And what's nice about that is, even if that is an initial 5-wave move down, looks like you have that wave 5 kind of around that 7,000 level. So that should still be met with some sort of a 3-wave retracement back to the upside. So
exactly,
I think that's a great level.
That's my reasoning also to buy it here. So if I buy at 7,000, okay, I'm gonna even get a pullback. My stop loss will be at break even. So I'm going to have a free ride to test if market is prepared from here to go higher. If not, I'm just going to go out of the trade and then short it. So it's a kind of a perfect setup from the Elliottwave perspective when you test the markets, okay?
Very good. Appreciate it, Alex. Thank you for the update.
No problem.
All right. Todd, you want to jump in? I'm going to make you presenter, sir.
Sure. Yeah, I just wanted to really good information there, Alex and team guys. That's excellent. I just wanted to share some charts that I didn't get to use last night on air. I was supposed to do fast money at 5, but the president was speaking at 5:30, so they gave me the choice. Do you want to stay? Do you want to go? You might be bumped. And I'm like, well, let me get out of coronavirus central here. So didn't get to use them. And we were just going to talk about general levels, and I think it's a nice way to kind of put a bow on everything that the guys are talking about here. And this is a chart that my team is probably tired of seeing, but I just think it's so interesting. And I was going to bring it up on air last night and throw the discussion to the desk. And I'm curious to know what your thoughts are. I put it in front of my team in a cent, and I've had really nice conversations like what this means. But the S&P is in black, and the 30-year bond, this isn't the yield, this is the price of the bond, is in blue. And this chart goes back to 1979. The bull run that was kind of kicked off by IBM back in 1982 is here. But you can see clearly that stocks and bonds over the last 4 decades are positively correlated with 2 exceptions, the 2000 crash and the 2008-9 crash. The rest of the time, you could argue that we have positive correlation. We started to see a little bit of volatility here in the S&P, and you're starting to see bonds move up from flight to quality here. But I would say that you're starting to see the correlation start to push back positive. And I'm just wondering, in the 80s and 90s, and there was a key intermarket shift that John Murphy does such a wonderful job of describing, because we went from an inflationary to a deflationary market, which changed the relationships of stocks and bonds post long-term capital management and the Asian currency crisis in the late 90s. We went into an inverse relationship showing the negative correlation. But I'm almost wondering, perhaps, with the dollar dropping as much as it is, I don't know, crude, maybe we'll start to see a little bit of a commodity sort of bottom, and maybe we'll at some point return to inflationary markets, which would give us a positive relationships of stocks and bonds. So I guess the point is, rates have been dropping for 40 years. So it wouldn't be unusual to see stocks and rates trade on an inverse basis where stocks and bonds trade together. Problem is, we're at a point now where interest rates are below 1, and we're starting to get to that sort of zero boundary where we're coming up to 0%. What does that mean? Are we going firmly? We have negative real interest rates now, or are we going to negative yield? This is kind of a point of reckoning after 4 decades that I think we need to really start considering. But watch that positive correlation. If in fact on the 20-period rolling quarterly basis, it'll be a couple years before we figure that out. Our stocks and bonds going to go back to this sort of relationship. And then the other one is just simple, just putting it in perspective. The team has done a great job, showing you where we've been. I was going to make the point, like, look, I know it feels scary. There's so much headlines over the last year or two. I mean, just yield curve, China, Trump dominating the news. We have an election coming up, coronavirus. There's so much that's been thrown at the markets. But I would also push that, the speed of information is just so much greater at this point, just because of the technology. So headlines are being thrust in our face all day long because the media organizations are competing for clicks, which are ad dollars. So the more headlines they can serve you, the more they grab your attention, the more money they make. We all know that. But that's why I love charts, and I think we just need to step back and put it in perspective and look, from the 2009 low, we've seen a 21% drop. In 11, when we had the U.S. debt downgrade, and I think that was the start of the European crisis, we had a 15% drop here in 2015 and 16. End of 18 into 19, we saw a 19% drop. And yesterday, when I captured this chart, we're at a 19.5% drop. So we've seen this movie 3 times post-credit crisis lows. We haven't broken channel support. I think, Bennett, you mentioned that already, that we really haven't broken just simple parallel channel, non-Elliottwave yet. And that comes down at this 2,600 level. There's so much that's happening. Alex just showed you that in Bitcoin, showing you the correlation of where S&P may find support. We have moving averages. We have Elliott. There's so much pointing down to the zone. And you know, perhaps you see a little overthrow through this parallel channel, and then it comes back. Don't know, but I just think it's important to keep in mind that, you know, with all the information that's being thrown at us, this is all that we've seen. It feels a lot. You know, I feel it in my accounts for sure. But you know what? We've seen this movie before. And just the last thing is this 200 weekly has been pretty interesting. It's defined the rally since the 2009 loan again that comes in right now at 2672. Yesterday I captured this for 2050. So
exactly.
Exactly. I just say let's keep it all in perspective. But I don't know. That's you know, that's all I've got. So take from it what you will. I'm just trying to kind of set the emotion and the pace of information that's being thrown at us aside. Stay objective and just continue to trade and invest based on our plan. Hopefully you have one.
Yeah, I couldn't agree with you more. I saw a meme going around. It says, "This is the 5th end of the world I've survived."
Yeah, I completely agree. Todd, on this 200 weekly moving average, we have looked at later before, and it corresponds so well with our triangle. So
I don't even like moving averages. I really don't. I don't even like. I hate when CBC comes and says, "Let's talk about the death cross." I'm like, oh. I mean, I don't even like moving averages. But they've been so relevant. It's annoying how relevant they've been. So we've got to talk about them.
Absolutely.
Yeah, exactly.
All right, guys. I appreciate you. Yeah, go ahead.
No, I just mean sometimes you compare them so well on these bigger time frames with the Elliott support levels. I mean, when you do this triangle and fib ratios and this 200 moving average, they pair so well. So,
I agree. When you have a confluence of indicators, it raises your conviction level, and we've got a lot of retail investors that really respect those levels.
I simply look 200 moving average because it's relevant for the other guys. I don't consider it relevant at all from my point, but everybody's watching it, so I think that's why it's relevant. So that's my point on that one. Yeah, but this is a very strong level there.
All right, guys. Anything else you can think of before we wrap it up? I've got one thing I'm going to send their direction right now.
Yeah, perfect. Just a reminder, I'm sure you're going to say it, Bennett. Viewers, if you appreciate the effort and the effort that goes into the show, please put a thumbs up on that YouTube window. Let YouTube and Google know that you're enjoying the content, and it'll get out to other people. That would be a huge help to us. That's the way to tell us that you think other people would enjoy the content. So thank you for that. Just put a little thumbs up. Question, comments, insults, and the commentary below. That also helps us sort of rise up in this digital information age.
Yeah, sorry guys. People would like here. I see that we show a gold chart. So can you do it, because everybody's asking for gold? So maybe we can do that. Can you do that, Bennett? Or
I'll make you present
if
it
you
right
have
now.
it ready.
I've got it, Alex. If tell me if I have the right one. QGC. Are you looking at this, Alex? If not, take the screen from me. Is that accurate? Bueller.
Yeah, that's one of the wave counts. Yeah.
Right,
the other one is
I'll send it to you.
Okay.
There you go.
Sure. Okay, so something happened here. I will just first explain this one. So this is just a wave count we have been looking for some time, that we are actually having a top here on gold. So if you look just without the Elliott wave, okay. So let's just erase all of the wave counts. I think for now, usually wave Cs are kind of a very sloppy and have a 45 degree of an angle. This wave C is unusually 75% of an angle. So what we think here with possible move in dollar lower, we just look for two options. This is either a 1-2, so we are developing here a flat in wave B, in wave 2, which was a running flat, and we are in some type of a wave 3 move up, wave 4 and a wave 5. So this wave count, if we go a little bit higher than this 786, which I think we are going now, yeah, we are actually above a nudge, a 786. So if we start pushing this more to the upside, then we will have to look this as something like a really impulsive move on the upside in regards to gold. So this even might be something like this. This is a kind of an extreme one, but this will be a 1-2, and then we are in another 1-2 up in 3, 4 and 5. And then we do 4-5 for a wave 3 and 4-5. And this is actually depicts a 5-wave move lower in dollar index, which I have showed you. Okay. So if you look at dollar index chart, even if this is just an A up in B and down in C, we should finish around 85, 84 level. Okay. So it's a pretty big drop in dollar, which might actually, if we start pushing this higher above this guy, produce a really big move higher in gold. Okay, so be aware that we are now at the key levels, and that if we go upside here, and if this level doesn't hold, if S&P starts to continue move lower, and we doesn't turn here to the lower prices, we might finish around 2,000, 2,200. Just be aware of this wave count. So this is my take on gold. So this is paired to the dollar and S&P. If we continue lower, this gold is going to be a very bullish on the upside. So this is the key levels we're holding for now.
Yeah, and let me just add to that. I agree with you, Alex and Bennett. I'm going to send it right back to you. I'm going to take 15 seconds.
No worries.
So I think it's important to just keep in mind the longer term gold chart. I mean, I remember I first started trading, prop trading in San Diego out of college, right in here when gold was at $280 an ounce. We were trading gold miners off of gold. So in that time, gold's gone from 260 just shy of 2,000. This pullback that we saw into 2015, I mean, it wasn't even a 1/3 pullback. It was pretty much a 30% retracement of what we've seen. So the pullback in gold has been very, very shallow. I hate to be super bullish on gold and be a gold bug. I'm not, but just technically relative strength, the shallowness of this correction, I think Alex's bullishness is certainly warranted just by the nature of that shallow correction. So I'll send it back to you, Bennett.
Very good. And actually, to take it even a step further real quick, and then we'll leave it there. Let me just get rid of some ratios. Bringing a chart over the top of your screen. This is going back to 1976. So could this be 1-2, smaller degree 1-2, smaller degree 3-4, and we're in 5 of that blue 3. This was a longer term count that Alex, Terry, and I had put together.
Oh, nice.
So that's still,
how'd you get that data all the way back?
This is bar charts data.
Oh, nice. Well done.
Thank you. All right, guys, we appreciate it. We're sorry we've gone so long. For those of you who missed our webinar this past weekend, we still have our special offer going. So traditionally, our premier member subscription is $177 a month. We're offering kind of a combination package deal here. We are offering 1 month of our Premier Trader service combined with our crash course, which you can see the various lessons planned there, as well as an additional private Get Starting webinar for anybody who does choose to take advantage of this offer. That's $297 value. We're offering it for $199, no strings attached, so there's no auto renewal. If you like the service and you choose to stick with us, you can choose to opt in and do so at that time. So no fear of continued obligation. If you're interested in taking advantage of that, you can go to tradinganalysis.com/join. And if you're interested in taking advantage of our Forex or our blockchain subscription, you can do so at /subscription. So thank you guys for joining us, and we look forward to seeing you all next week. And anything else, guys? Any parting words?
No, No, it's funny. I'm laughing at Joe. Peter Schiff will love you. I know. I'm like, if gold goes to 5,000, I think the whole collective financial community is going to say, "Oh God, here we go." I actually interviewed Peter Schiff on one of our shows on CNBC, and oh man, yeah, he's probably one of the most outspoken gold bulls out there. But hey, great job, guys. Attendees and viewers, thank you so much for the commentary. All very interactive and helpful. So, guys, we appreciate the viewership and you taking your time. And Trade Analysis Team, great job. Thanks for having me.
Thanks, Todd. Thanks, everybody,
Thanks,
for
Todd.
being here. And we'll see you all next week.
Next week.
Take care.
See you.